Today I'm going to be talking about the top 10 things that the IRS doesn't want you to know. Now, what a lot of people don't realize is that the IRS is a for-profit organization. How do they make profits? In the taxes that they collect from you and from me on behalf of the federal government. And in this tough economy, the IRS is doing everything they can to raise revenues. So the more you can arm yourself with this information, the less tax you'll pay. You'll be real happy with your tax bill. Number one, they don't want you to know that you can still benefit from home ownership even if you don't itemize your deductions on your tax return. Something called the Housing Assistance Tax Act of 2008 allows homeowners who pay property taxes to deduct an amount for those property taxes even if they don't itemize. So this is especially good for those taxpayers who may not have enough deductible expenses to exceed the standard deduction. It works like this. First you start out with your standard deduction and then you add an amount that represents your property taxes. Now you're allowed to deduct either the property taxes themselves or an amount equal to $500 for single filers or $1,000 for joint filers, whichever is less. You add that amount to your standard deduction and voila, a lower tax bill through a greater number of deductions. Now the second thing they don't want you to know is that audits are not just for the wealthy. And since the year 2000, audit rates in fact have doubled. They're really out there with their big guns trying to raise revenue. So what you want to do is work with a good, smart, proactive tax professional to help you fly under the radar. Make sure you're working with somebody who's very familiar with what sorts of topics are on the hit list with the IRS so that they can help prepare you with good documentation and lower the risk of this happening to you. Now the third thing they don't want you to know is that if you can't pay your taxes, you're not going to lose everything. Depending on your circumstances, you may qualify for what's called an installment agreement. So if you owe the government money and you can't afford to pay, don't stick your head in the sand and ignore the tax bill. Go ahead and file your tax returns, and you can simply apply for what's called an installment agreement, which allows you to make payments. There's also different ways that they accept. They'll also accept credit card payments, but simply ignoring it can be a big problem. Also, if you get contacted by a private collection agency on behalf of the IRS for back taxes that you may owe, request to have your file transferred back over to the IRS. And here's why. Because the private collection agencies don't have the authority to negotiate with you or make deals, whereas an IRS agent can do an offer in compromise, which allows you to settle your debt for pennies on the dollar. So if this happens to you and you get a call, simply ask to have your file transferred back, and that gives you more negotiating power. Now they also don't want you to know that getting professional help can result in a much bigger refund. And let's face the facts. Taxes have gotten so complicated that over 80% of Americans out there are using a tax filing software or a certified tax preparer to get help with their tax returns. Now, a good qualified tax professional is going to help take your taxes one step further. They're going to look at your expenses and have a dialogue with you to ask you questions to hunt for additional deductions that you may have missed. It's really going to help you look for ways to lower your tax bill. Now, if your employer downsizes, it could mean a lower tax bill for you, and the IRS doesn't want you to know that. The latest effects on the economy have employers really feeling the pinch and looking for ways to reduce expenses, and that may mean that they're not reimbursing you for employee expenses that they may have been generous with in the past. So if you find yourself paying out-of-pocket expenses for your employment, make sure you keep your receipts. Report them on a Form 2106. And be sure to subtract out any reimbursements you may have gotten from your employer. The balance then gets transferred to your Schedule A, where you list all your itemized deductions and can really help to maximize your deductions on your tax return. The IRS doesn't want you to know that the government will pay you to go green. That's right. They want to give you an incentive in the form of tax credits for energy efficiency. So if you've got expenses for qualified insulation, heating and cooling systems, solar panels, or even hybrid vehicles, it can result in a tax credit for you. And we love tax credits because they're a dollar for dollar reduction in your tax. Now, if you owe the IRS money or you receive a bill from the IRS, you may not even owe them the money. That's right. The IRS mails out thousands of so-called CP 2000 notices each year that are riddled with mistakes, and they generally just ask for clarification on the deductions or positions you've taken on your tax return, but don't result in extra tax. So don't let them scare you into paying taxes that you don't owe, or even worse, leaving deductions on the table out of fear of the IRS retaliation. It's simply just write a letter of response explaining what the IRS has asked you, or even providing additional documentation that they may have asked you for. And working with a good professional, again, can really minimize the risk to make sure that this doesn't happen to you. Now, the IRS doesn't want you to know that throwing money into an IRA may not save you tax, and I know this goes against the grain a little bit, but individual retirement accounts may satisfy your immediate need to lower your current tax bill, but this money becomes taxable when you take it out at retirement. So if you think your tax rate is going to be higher in the future, you may be having a trade-off there and trading a low tax rate today for a higher one in the future. That makes the IRS very happy. So make sure that you do careful analysis and make sure you're not in for higher taxes down the road. If this is the case for you and you expect the tax rates to be higher in the future, think about using a Roth instead to convert your deposits into tax-free withdrawals and avoid future tax hikes when you retire. Now, April 15th also is not the drop dead date for tax filings, and the IRS doesn't want you to know that. They want to rush you into filing a tax return. Now, your actual tax bill is due April 15th, but you can claim an automatic 6-month extension simply by filing a request for extension. And with all the tax law changes, it may be better for you to take longer to prepare your tax returns and save more money. So be sure to file an extension to give you some more time to file. Now, the last thing, and also the most important thing that the IRS doesn't want you to know, is that planning is the key to beating the IRS legally. I don't care how good your accountant is with a stack of receipts on April 15th, if you didn't know what deductions, credits, and loopholes are available to you, those breaks are lost forever. True tax planning gives you concepts and strategies that you need to minimize your taxes. Now, every time Congress decides to change the law, it changes your opportunities and changes the choices that you have on how to make your tax situation better. True tax planning tells you what to do, when to do it, and how to do it. So if you don't currently have a tax plan, make sure you get one so that you don't miss out on breaks again this year. Thanks for joining me, and until next week, keep more of what you earn.